The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amount to, and it would come to $51 million now.
Well, this clip of Buffett gives us a good idea of what could happen if we buy and hold ETFs forever. So in this video, we're looking into the world of Vanguard ETFs, a selection of investment vehicles that represent the very principles Buffett advocates for: low costs, broad market exposure, and the creation of long-term wealth. As we explore these financial gems, we'll reveal how, with an initial investment strategy focused on these Vanguard ETFs, you could potentially grow your portfolio, with the chance of securing great annual dividend returns. At the end, we will show you an ETF that, with careful selection and strategic patience, has the potential to significantly increase your investment to $17 million, with around $90,000 in dividend returns per year. So come with us as we show you 8 of the best Vanguard ETFs that Warren Buffett might buy and hold forever. Whether you're planning for retirement, saving for a dream vacation, or setting up a college fund, understanding how these ETFs can work in your favor over 5, 10, 15, 20, 25, and 30 years will be a game changer. So grab your notepad and let's look into the financial strategies that could lead your way to a future of abundance and security. First of all, what are ETFs? ETFs, or exchange-traded funds, are investment funds traded on stock exchanges, similar to stocks. They pool investors' money to invest in stocks, bonds, or other assets. Unlike mutual funds, ETFs are traded throughout the day. They aim to track the performance of an underlying index and often have lower fees than mutual funds. ETFs offer easy diversification and can be used for various investment strategies, making them suitable for both experienced and new investors. Now let's talk about those magical 8 ETFs. In our exploration of Vanguard ETFs recommended by Warren Buffett for long-term investment, at number 1 we have the Vanguard S&P 500 ETF, or VOO. This ETF is favored for its broad market access, low cost, and robust performance. With an expense ratio of just 0.03% and a dividend yield of 1.33%, VOO shines for its exceptional 12.70% average annual return over the past decade, outperforming similar funds mainly due to its significantly lower fees and investment in rapidly growing communities. When considering the growth potential of a $10,000 investment in VOO, assuming it continues to grow at its 10-year average rate of 12.70% annually, the results are compelling. In 5 years, the investment could grow to approximately $18,181. Moving forward, in 10 years, it's expected to reach around $33,055. And by 15 years, it could escalate to $60,098. Looking even further ahead, in 20 years, the investment could approximately be $109,264. And astonishingly, 30 years later, it might expand to around $361,175. This illustrates the power of compound interest and the impact of VOO's strategic investment choices, emphasizing low costs and a preference for companies with high growth potential. Matching and often exceeding its benchmark and peers over multiple periods, VOO presents itself as an ideal investment for those committed to a buy and hold forever philosophy, perfectly mirroring Warren Buffett's approach to investing in high-quality assets for the long term. Next in our series of Warren Buffett's Vanguard ETF recommendations for a lifelong portfolio is Vanguard Dividend Appreciation ETF, or VIG. Ideal for investors looking for a foundational asset that offers higher income than the S&P 500, VIG stands out with a modest expense ratio of 0.06% and a dividend yield of 1.77%. It targets companies known for consistently increasing their dividends over 10 years, resulting in a dividend yield about 33% higher than the broader market, illustrated by VOO. VIG is especially appealing for those prioritizing stability and quality in their investments. Its focus on dividend-growing firms translates into investing in businesses that are both rewarding to shareholders and typically less volatile, underpinning a more solid investment foundation than many of its counterparts. With a portfolio exceeding 300 companies across sectors such as technology, financials, healthcare, consumer discretionary, and communication services, including giants like Microsoft, Apple, ExxonMobil, United Health Group, and Johnson & Johnson, VIG curates a selection of premier dividend-increasing companies. This composition positions VIG as a relatively conservative investment, potentially less prone to market swings than more aggressive strategies. A $10,000 investment in VIG, leveraging its 10-year average annual return of 11.23%, shows promising growth prospects. Over 5 years, this investment is projected to increase to around $17,026, and by 10 years to approximately $28,988. Extending to 15 years, the growth could reach about $49,355, and by 20 years, it could climb to an estimated $84,031. Remarkably, over 30 years, this initial investment might swell to $243,589. This strategic emphasis on dividend growth not only enhances income potential, but also offers growth prospects, making VIG a compelling choice for those seeking a blend of conservative investment and profitability. Such characteristics are in harmony with Warren Buffett's investment principle of holding high-quality assets for the long term, securing VIG's position as a valuable addition to any enduring investment strategy. In our journey through Warren Buffett's top Vanguard ETF recommendations for a lifetime investment, we spotlight the Vanguard FTSE All-World EX US ETF, or VEU, at number 3. With a low expense ratio of 0.07% and a generous dividend yield of 3.35%, VEU is a gateway to international markets, holding around 3,600 stocks from every sector except the United States. Despite the historical lag in foreign stocks' performance against the U.S. equities, VEU presents a compelling case for global diversification, potentially unlocking high-value investment opportunities and superior dividends. VEU's portfolio, rich in financials, industrials, technology, and consumer cyclicals, mainly targets large-cap entities. It's designed for investors seeking comprehensive foreign stock exposure, promising both solid cash flow and capital appreciation. A $10,000 investment in VEU, with its 10-year average annual return of 4.46%, could grow to approximately $12,438 in 5 years, and extend to about $37,025 over 30 years. This ETF not only diversifies an investment portfolio geographically, but also aligns with Buffett's principles of diversification and long-term investment in quality assets, making it an essential hold-for-forever asset in any investor's portfolio. The Vanguard Intermediate Term Bond ETF, or BIV, our fourth recommendation in Warren Buffett's top Vanguard ETFs for a buy and hold forever portfolio, presents a compelling option for those seeking to add stability and income to their investment mix. Featuring a remarkably low expense ratio of just 0.04% and a high dividend yield of 3.27%, BIV stands out as a fixed income fund that has consistently outshone its peers in the Morningstar Intermediate Core Bond Fund category over various time spans, including the past 3, 5, 10, and 15 years. With its dividend yield roughly doubling that of the broad U.S. stock market and an SEC yield surpassing 4%, BIV offers lucrative income streams for investors. This is particularly attractive as the fund's dividend yield has been on an upward trajectory, promising enhanced income generation for its holders. Moreover, in a stabilizing interest rate environment, BIV is poised to reward investors with sustained income. Should interest rates decline, there's an added benefit of capital appreciation, making BIV a dual threat in terms of investment returns. A $10,000 investment in BIV, given its average annual return of 1.94% over the past decade, would grow to $11,008 in 5 years, $12,118 in 10 years, $13,340 in 15 years, $14,686 in 20 years, and $17,797 in 30 years. This steady growth, combined with the ETF's focus on income and stability, underscores BIV's value in a diversified long-term investment strategy, embodying Buffett's investment principles of quality and balance. The Vanguard ESG US Stock ETF, or ESGV, secures its place as our fifth recommendation in the portfolio of Vanguard ETFs endorsed by Warren Buffett for long-term investment. This ETF appeals to investors who prioritize environmental, social, and governance criteria, offering an expense ratio of 0.09% and a dividend yield of 1.09%. Since its launch in September 2019, ESGV has achieved an impressive average annual return of 13.31%, showcasing the potential for substantial growth while adhering to ethical investment standards. ESGV distinguishes itself by meticulously selecting companies that align with the UN Global Compact's principles, ensuring investments contribute positively to societal goals. It excludes firms involved in controversial activities such as adult entertainment, alcohol, tobacco, and fossil fuels. Despite its ethical stance, the fund maintains a diverse portfolio of around 1,500 mainly large-cap U.S. companies, with a heavy emphasis on growth or blend stocks. The ETF's robust performance is backed by a projected earnings growth rate of about 11% over the next 3 to 5 years, significantly outpacing its category's average. Notably, technology, healthcare, financials, and consumer discretionary sectors dominate its holdings. A $10,000 investment in ESGV could potentially grow to $18,678 in 5 years, and to an impressive $424,666 in 30 years. ESGV's combination of ethical investing, diversity, and strong growth prospects aligns perfectly with Buffett's investment philosophy, making it an indispensable choice for the conscientious investor looking to blend ethical values with long-term financial growth. The Vanguard Healthcare ETF, ranking 6th on our handpicked list of Warren Buffett's top Vanguard ETFs for long-term holding, shines for investors drawn to the healthcare sector's resilience and growth potential. With a competitive expense ratio of 0.10% and a dividend yield of 1.28%, VHT offers broad exposure to the healthcare industry, encapsulating around 400 entities involved in products, services, technology, and equipment. A standout feature is its impressive 10-year average annual return of 10.88%, underpinned by a strategic emphasis on major healthcare companies. These top-tier firms constitute nearly half of the ETF's portfolio, spotlighting VHT's concentrated yet robust investment approach. VHT's investment appeal is significantly enhanced by demographic trends, notably the aging U.S. population. Projections tell us a pivotal shift, with those aged 65 and older expected to comprise 20% of the populace by 2040, up from about 12.5% in 2000. This demographic evolution heralds escalating demand for healthcare services and innovations, setting the stage for VHT's holdings to benefit substantially. A hypothetical $10,000 investment in VHT, capitalizing on its historical performance, could witness remarkable growth, approximately $16,760 in 5 years, $28,089 in 10 years, $78,898 in 20 years, and potentially soaring to $221,614 in 30 years. This trajectory underscores VHT as a strategic pick for those aiming to integrate the healthcare sector's growth and stability into their investment portfolio, perfectly aligning with Buffett's strategy for enduring value and societal relevance. The Vanguard Small Cap Value ETF, or VBR, Our seventh pick in the Warren Buffett endorsed portfolio of Vanguard ETFs for a buy and hold strategy is a standout for its strategic focus on undervalued U.S. small cap companies. Boasting a low expense ratio of 0.07% and an attractive dividend yield of 2.01%, VBR stands out as a diversified collection of approximately 850 holdings, where the top 10 account for a mere 6% of the fund's assets. This ETF has consistently outperformed its Morningstar small cap value category across various timeframes, showcasing its strength despite trailing the broader S&P 500. A key attribute of VBR is its emphasis on the small cap value sector, historically known for its outperformance potential, especially when considering its low price-earnings ratio below 14. This ratio signals that investors are getting earnings at significantly more favorable rate compared to the broader market, as highlighted by the PE ratio of about 25 for VOO, an S&P 500 proxy ETF. A hypothetical $10,000 investment in VBR, benefiting from its 10-year average annual return of 8.47%, would see impressive growth, approximately $15,016 in 5 years, with it rising to a remarkable $114,628 in 30 years. VBR's adept blend of value, diversification, and proven performance positions it as a crucial component of a diversified investment portfolio, perfectly aligning with Buffett's principle of acquiring quality assets at reasonable valuations for long-term wealth creation. The Vanguard Growth ETF, or VUG, claims the final spot on our list, embodying Warren Buffett's strategy for investors who aim for substantial long-term growth. With an impressively low expense ratio of 0.04% and a modest dividend yield of 0.53%, VUG grants cost-effective access to around 240 U.S. large-cap growth stocks. Notably, the fund is heavily weighted towards technology stocks, which make up over 40% of its portfolio, followed by significant investments in consumer cyclicals, consumer discretionary, and then telecom sectors. While VUG is acknowledged for its volatility, its stellar performance is undeniable. The ETF has consistently outperformed its large-cap growth peers in the Morningstar category across 1, 3, 5, 10, and 15 years, demonstrating resilience and sustained growth. This makes VUG an excellent choice for investors looking to concentrate on leading technology and consumer discretionary firms. Let's explore how a strategic investment in VUG, given its 10-year average annual return of 14.82%, could realistically evolve into a $17 million portfolio with annual dividend returns of $90,000. Our calculations suggest that starting with an initial investment of $68,000, given VUG's impressive 10-year average annual return of 14.82%, this investment can realistically grow to the target value over approximately 40 years. At this portfolio size, the investment would generate around $90,100 in dividends annually. This scenario makes VUG stand out as an extraordinary ETF for those committed to long-term growth, especially for investors focused on the technology and consumer discretionary sectors. As we conclude our exploration of Warren Buffett's top Vanguard ETF picks, it's clear that strategic long-term investment in these carefully selected ETFs can significantly enhance your portfolio, aligning with Buffett's philosophy of patience and value investing. From broad market exposure to specific sectors like healthcare and technology, each ETF offers a unique pathway to potentially achieving remarkable financial growth and stability. Now, we'd love to hear from you. Which of these Vanguard ETFs aligns most closely with your investment goals and why? How has exploring these ETFs influenced your thoughts on long-term investment and portfolio diversification? Share your thoughts and let's strengthen our investing journey together.